Good afternoon, everyone, and welcome to the latest episode of 62 Who Knew. I just looked and I found out we're episode 98. Two more, triple numbers. It's a good thing our viewers are much more than that, huh? But welcome today. We're going to have a very good day. We got a little change in plans. You know, we always have a lot of marketing that goes out on Facebook and LinkedIn. And for those of you that saw it today, and we thank all of you constantly that follow us. You know that we were planning to have a show with two incredible people that for the last 26 years, Mr. and Mrs. Taylor, owned Taylor Custom Made Construction in the Baltimore area. And they were going to talk about over the last decade how more and more of their jobs have become retrofitting homes for people to stay at home, not go to a home, stay at home, making them more accessible, specifically bathrooms, but not just bathrooms, moving master bedrooms from upstairs to downstairs, moving the cabinets down. Again, just so much. And unfortunately, we learned just a little less than 30 minutes before airtime that this wonderful family had a medical emergency with someone else in their family. And what can I say? We all of us here at 62 Who Knew certainly send out our thoughts and our prayers to their family and their loved ones, and we hope everything's going to be okay. And we are going to not cover that topic today, although it is an important topic. Aging in place, you know, those three words are on the tip of everyone's tongue with longer lifespans, but we're not going to be discussing that today. Instead, we are going to be bringing back who is going to be here anyway, one of our regulars, Mr. Stephen Sless, who is nationally known, as you all know, as a reverse mortgage expert throughout the country. We did a show just 2 or 3 weeks ago, where we had a record viewership where Stephen discussed for the entire show the myth versus realities of reverse mortgage, the fact versus fiction, the fact that this great product is surrounded by still so much misinformation and so much half-truths. And he must have done a great job because of the response of the show from all of you out there. We got emails, we got compliments, we did reverse mortgages. It was just a great show. But we only got to spend about 15 minutes on the purchase reverse mortgage. And that's all I'm going to say right now, because I want to do our normal synopsis of the show for the new viewers that we have. I want to get Stephen right back on, and we're going to donate this entire show to the purchase reverse mortgage, a product that has been out for 12 years, a product that some of the most intelligent people in the country, far more intelligent than I, said is literally going to change the way seniors buy their retirement home and alter their lifestyle and increase their quality of life during their retirement years. That was the prediction 12 years ago when this product was brought out. It hasn't even come close to doing that. Why? Stephen and I are going to discuss that. But if there was a time to get this message out, it would be today. So let me just do a quick synopsis for our new viewers and then bring Stephen right on. This is such an important topic in today's 62 Who Knew universe. As most of you know, 62 Who Knew deals with the ever-present blessing / double-edged sword of longer lifespans. Over the last 2 to 3 decades, medical technologies, scientific breakthroughs have been like none before. At 62 years old myself, certain things that I took shots and vaccines for when I went to school, measles, mumps, things such as that, children today don't even know what these diseases are. And instead of our fathers and our grandfathers, like us, and our grandmothers and our mothers, at 62 years old, 55, 58, 62 years old going, I wonder if I should take my Social Security now, or should I defer it to a later age? That's what I was thinking 6 months ago when I turned 62. I wonder if there should be no mortgage on the house. Should I keep working? Do I need long-term care insurance? At my present age and health, can I even get long-term care insurance? Should I increase my life insurance? You know, it's getting more expensive as I get older. We all have these questions. Well, not all of us. About 99% of the country has these questions. The other 1% is so rich they don't have to worry. But the rest of us, we all have the same questions. And the point is that our dads had and moms had the same questions, and their dads and moms had the same questions. Except our generation, the baby boomer generation, who is the majority of our viewers, we have one different hurdle, one huge bump in the road that our moms and dads and grandparents didn't have. Longer lifespans, where they were planning to live to maybe in their 70s, maybe even early 80s. Today, if you make it to the early 60s in this country, if you make it to 62, you have a 50-50 chance of making it to your 90s. You have almost a 45% chance of making it into your mid to upper 90s. And based on scientific breakthroughs in medical technology and discoveries of the last 10 years, there's no doubt in the decade to come, that's going to be up to 100. Longer lifespans, as much of a blessing as it is also a double-edged sword. And that's what 62 Who Knew is about. Each week we discuss a different topic. We bring on a different national expert, whether it be Social Security, deferment of Social Security, long-term care, Medicare, Medicaid, Medicare supplemental policies, life insurance. The list just doesn't end. In-home care, it's just a never-ending list of what we have to discuss, the 99% of us that work for a living, how to get into those 90s with the highest quality of life. And today we are going to discuss one of those topics that is very near and dear to my heart and also to the heart of our guest, which I'd like to bring on right now, if we can, John. And there he is, Mr. Stephen Sless, who's become one of our regulars on the show, usually one of our panelists. He was going to be a panelist today with Mr. and Mrs. Taylor as we discussed retrofitting homes to age in place. Three words that I think are on the lips of every baby boomer, baby boomers' parents, and I hope on the list of every financial planner to bring up to his clients. But you know what happened, of course. These are good friends of yours, and I know you wish them the best as well.
Absolutely. Yeah, Kevin and Suzanne, we're thinking about you. Hope everything is well. We send you our best. Our thoughts and prayers are with you, and we hope to see you on the show again soon.
You know, it's one of the things about doing a show like this. You know, I don't really know them, but you speak to them, you start to know them, you hear something, whether it be a dad with COVID or a medical emergency like they're having, or a child with a high fever, and even though the closest you've been to these people is a Zoom call or meeting or television show, and but suddenly they're part of the extended family, and you're thinking about them, because since that call with Nancy, I can't stop thinking about it. I hope everything's okay. It's one of the great things about the show, but it's one of those double-edged sword things, sort of like longer lifespans that you get involved with, you know, people that suddenly you're part of their lives. So
it has a way of putting everything into perspective, right? These are strategic partners of ours. You know, I've worked with the Taylors for quite some time, and you just don't expect anything like that. You know, we're excited to do a show with them tonight, and then all of a sudden, you know, one call changes everything. A call to them, obviously, not to us. I mean, for us, I mean, who cares? It's just a show. But, you know, one call changes everything for them, and they're obviously taking care of their family situation, and we hope and wish them the best. But, you know, could happen to anybody, you know, and it's a way, one more thing that just puts everything in perspective. And what we're doing on this show and trying to educate people and empower them to plan, right? You never want to have to execute a lot of these plans, but they're important to have in place.
Yeah, and you know, the topic of today, and sometimes in my own sphere of influence, we tend to say SOI, and I think maybe sometimes a lot of our viewers are going, what the hell is SOI? You know, sphere of influence. You know, they don't even bring up sometimes a purchase reverse mortgage to me, even in passing, to do business, of course, because they know how emotional I get about this. When I read about this, and I, just to go on a side path just for a second, when you and I first became LinkedIn friends, which is how we met. I think, one of the reasons we became so close so quickly and fans of each other is you share this passion. Some of the most brilliant people in the world, economists, not realtors, not mortgage people who are going to sell it and make money with it. Economists said that the purchase reverse mortgage, and they said this in 2009, could literally change the way seniors purchase their retirement home, could literally give them hundreds of thousands of dollars of extra liquidity. How can a mortgage give somebody extra liquidity? Allow them to do so many things during retirement, from long-term care to financial planning, but I'm going to let you get into most of that, and yet still achieve the goal of no payments during their retirement. We were all so excited about that. It's what, in many ways, drew me to the reverse mortgage business. And I'm not going to say, you and I talked about this 2 weeks ago, that the product has failed. Our industry has failed miserably at getting this product to the financial planning world and to the consumer. And that's why it was a tragedy, but we have 45 minutes right now, and that's all we're going to talk about. And for those consumers out there, financial planners, insurance agents, IFAs, anyone who is listening, please don't go, wait a minute, they talked about this 2 weeks ago. Let's watch something else. What's better than Stephen and I? I mean, let's be realistic.
That's a good point.
Wow. Spinning the wheel? Come on. Stephen, I'll buy a vowel. That's why we switched to 5 o'clock. We don't do 7 o'clock anymore. We just couldn't compete with Vanna, and I don't blame them, But be that as it may, your take on the purchase reverse mortgage and how our industry has failed.
You said it all.
Sorry.
The purchase reverse mortgage is and continues to be the sleeping giant of the reverse mortgage industry. Since its inception in 2009, it has changed the way that some home buyers 60 plus purchase their next home. And let's think for a moment, Michael, why it's so important to have this option, right? So before 2009, what were the options for home buyers 60 plus looking to purchase their next permanent home? Well, paying cash was option number one, and then taking out a mortgage, either a 15, a 20, or a 30-year mortgage. The problem with paying cash is that you're depleting a large portion of your assets, whether it's the proceeds from the sale of the previous home that could have otherwise been invested into your retirement portfolio and could have earned you more compounding interest over time, or you're depleting other assets from your 401k, from your IRA, from your stocks. So the other alternative is to purchase a home and finance it. Just finance it like you ordinarily would finance a home, like you financed homes, time and time again throughout your life. Taking out a mortgage, being a 15, 20, or a 30-year mortgage. But the problem with that is you're saddling yourself with a mortgage payment later in life, right? And if you're 60-something, having a mortgage payment may not be that detrimental now, but what about 10 years from now? What about 15 or 20 years from now? What if it's a 30-year mortgage? Do you really want to have a mortgage payment into your late 80s and early 90s? To me, that's madness, right? You want to get away from payments as you're growing older. And one way to do that is by purchasing your next home with a reverse mortgage, which enables you to put down roughly 50%. The reverse mortgage covers the other 50%. You now have financed a home, let's say a $400,000 home, for $200,000 in cash, and you're able to repurpose the other cash for more comprehensive financial planning. So it opens windows to other advanced planning strategies that wouldn't otherwise be accessible if you were going to pay cash or whether you were going to finance the home more conventionally. You're right, Michael. I think the industry has failed to get this product out there. And in my opinion, it's because we've been going after the realtor. We've been saying, hey, Mr. or Mrs. Realtor, I have this amazing product. How come you're not more interested in it? And the realtor is going to say, well, Steve, Michael, if my client has $300,000 in cash, why would I want to risk that cash transaction and inject a mortgage into the situation? And I get that.
I do
right?
too.
It's the financial planners, Michael, and we've had this conversation offline. The financial planners understand this better than anyone else. It's not the realtors that we need to educate. It's the financial planners. Because if you're going to sell your home and move, right? And let's say, I think the last time I was on the show, I gave a scenario where my client had a $400,000 home. They were able to walk away with $300,000 of cash, and they could have put that cash down towards the purchase of their next home. But instead, they were able to put down $150 and gave the other $150 to their financial advisor. Well, what could that $150 turn into? It's not just $150. How much could that financial advisor invest that money, and what kind of rate of return can they get? Or could they purchase long-term care, or could they purchase an annuity or another type of financial product that's going to yield them a higher return? So in my opinion, it's the financial advisors that need to be more aware of this, not just the realtors.
Absolutely. And just to take that for a second and put it aside, I want to talk strictly financial planning at this point. Let me be clear. I am not a certified financial planner. I'm not even a non-certified financial planner. I am a mortgage person. But I am one of the few people in the country that is approved by FPA, Financial Planning Association of America, to teach the uses of home equity to certified financial planners. And I want to talk about that for a second, only because, not my certification, but this is going out directly to you, Mr. Certified Financial Planner, Mr. IFA, Independent Financial Advisor, Mr. CSA, Certified Senior Advisor, anybody that considers themselves a financial advisor, right? Let's take away mortgages for a second. What I'm about to say is just a message for this financial world. We all know this. It's stating the obvious in the financial world. The number one fear for seniors, and when I say seniors, 62 and above, in the United States of America, for the majority of the last 4 decades, 40 years, the number one fear has always been death. And these polls that are taken, these surveys that are done, these are not being done, by some guy over the phone. These are major colleges throughout the country that for the last 4 decades have put people in huge, huge auditoriums. People of all color, people of all income levels, people of all religions, people of all tax brackets. And for 30 to 40 years, 3 to 4 decades, they listed things that people were afraid of as they were approaching retirement. And doesn't it make sense that death would be their number one fear? Until you're 62 to 65, you're not thinking about anything. You should be preparing, but oh my God, Social Security? I'm a few years away from Medicare. A lot of my aunts and uncles are dying. People start dealing with their own mortality. Now, how do we bring this back to what we're talking about? Notice I said the great majority of the last 3 to 4 decades. The number one fear for seniors in this country has been death. It's normal. It's human. But not the last 6 years. Those same universities, those same colleges, those same think tanks that have been doing this for more than 3 decades have told us, and please, our viewers, Google this, that death has moved to the number 2 position. The number one fear for an older person in this great country is no longer death. It's running out of money before they die. And to me, in the greatest country in the history of history, how can death move to number 2? But it did. And what the purchase reverse mortgage can do to alleviate that number one fear, it just kills me that we haven't done a better job. Your example of your $400,000 purchase, putting up $200,000, still getting their $400,000 house, still making their goal of no monthly interest and principal payment, so no payment during retirement, and going back to their financial planner and going, I have this extra $200,000 that I've never planned on. Can you do something safe and long-term with it, please? Because we never planned on having it anyway, so I'm not broke before I die. How could we have not got this message out in the last 12 years? I don't get it.
And Michael, it's not just, I think your example is fantastic, but it's also the more astute and savvy homeowners now. It's not just folks that have a fear of running out of money. We have several clients right now that are doing new construction. They're building and customizing their dream homes, their forever homes. And I had one of the clients that we were doing that, we had to do a pre-approval. Like any mortgage, you have to do a pre-approval to be able to buy a home with a reverse mortgage. We're going through the pre-approval process with this family, who was a referral from my financial advisor, because the financial advisor understands how powerful of a product this is, not from a realtor. They said, Steve, we're in the middle of doing all these different add-ons, right? We're at the point right now, and they don't need to buy this house with a reverse mortgage. They're worth a liquid $3 million on paper, plus the sale of the home that they're moving out of. They could very simply and easily buy this home for cash or buy any home that they want to. I mean, we're talking 800 credit scores, lots of assets, high net worth. They're choosing to buy the house with a reverse mortgage because of what it enables their financial advisor to do with the proceeds that they're receiving from the sale of their current home. And even though they're not ones that are fearful that they're going to outlive their money, they want to optimize their retirement income. Right? They want to make their money last as long as they can. They want to be able to leave a nice legacy to their heirs and to their future generations. So they came back to me and they said, Steve, wait a minute. You're telling us, as we do these add-ons, we can add the nicer bathroom and we're getting it for 50 cents on a dollar. We can add this gazebo outside. We can add this additional master bedroom suite, and we can get that for 50 cents on a dollar. Not that they're not taking out a mortgage for the whole thing, right? But the cash that they need to actually put down is about 50% of the final sale price. So they were going to pay cash for this house. Now, instead of paying cash, the only cash outlay for them making these upgrades and additions to the home is 50 cents on the dollar. The loans are federally insured. They know that they're never going to leave a debt to their heirs or to their estate as their reverse mortgage balance rises over time. And their financial advisor now is going to be able to optimize their retirement portfolio, in the income strategy within the retirement portfolio, because they're not going to spend cash of their asset pool and buy the next home for cash. And this is a $600,000, $700,000 house that we're talking about. So it's not just those that are fearful of running out of money. These are very wealthy, established, high net worth individuals that are looking at reverse mortgages as the strategic tool that they're designed to be. And now that's a whole different conversation that the reverse mortgage world has never really had in the past.
That's right.
Buying the house with a reverse mortgage for the high net worth, not just folks that are, struggling to get by.
Isn't it amazing that it is the people with money that generally make the decisions how to keep as much of their money as possible? Whereas you would think, to a degree, it would be that person that doesn't have that much to go, wow, I could have an extra couple of $100,000. But, I learned at too late of an age, people with money, they like money. I don't know if I'm saying that right. I remember younger in my career, in my mortgage company, if I got to the end of the month and drew a nice paycheck and there was a couple of bucks in the bank, I'm talking in my 20s or 30s, and we could plan a cruise with the kids, or I could plan a weekend in Vegas, I was just happy as anything. And as time went on and the balance built a little, and the pipeline built a little, and I would go, wait a minute, we're below X. And my friends would remind me, Do you remember when you had 1/10 of X and you didn't care? And not that my X is that big now, but it's bigger than 20 years ago.
Yeah.
Once people have money, they like to keep money. And of course, I always lean, towards the people that, to me, that's what 62 Who Knew is about, like with our long-term care insurance initiative, towards those people, towards the masses that maybe don't have a financial planner, that have that 680 credit score, 660, that there is nothing to be ashamed of. That's considered good credit in this country. They don't have hundreds of thousands of dollars in the bank. Maybe they have tens of thousands. Maybe they're a hardworking school teacher that has saved several $100,000, but that's not going to take them from 62 to 90. This product to those masses is just a life changer. And I don't know of any other mortgages in my 39-year career that I could look into a TV camera or even to a person face to face and say, please consider this. It's a life changer.
There's no other mortgage like it on the market, whether it's the purchase reverse mortgage or whether it's a traditional reverse mortgage or whether it's the jumbo or the proprietary reverse mortgages that are out on the market today. Mm-hmm. There's no other mortgage product like a reverse mortgage. And retirement, Michael, isn't what it used to be, right?
That's
I mean, back 20, 30, 40 years ago, I mean, you worked hard, you save money, you invested in an IRA or a 401k, you did the right thing, you paid your bills on time, but at the same time, what you were doing without even realizing it is you were building this housing wealth nest egg. Yep. Just by doing what most Americans do, and they make their mortgage payment every month. And, it's a bill, it's a burden. But what that bill and burden creates is equity. And that equity can be leveraged in retirement. Maybe it can be leveraged with a reverse mortgage to stay in your current home, or maybe your current home isn't necessarily conducive for your long-term needs anymore, right? Maybe you're in a home that's 3 stories. Maybe you could use to be on 1 story. Mm-hmm. Maybe you need to do so much work to the current house to get it up to par for you to be able to age safely in place. Maybe it would just be more beneficial if you sold this current home and you bought a home that was more customized and conducive again for you to age in place. And, the past 12, 13, 14 months, Michael, with COVID-19 has taught us how important housing really is.
Yes.
And there's nothing wrong with a long-term care facility. Some of these long-term care facilities are very nice, and they have all the accommodations that you could ever desire and need. But the fact of the matter is, there's nothing that replaces aging comfortably in your own home. And in order to do so, you may require some level of long-term or extended care. How are you going to pay for that care? Well, if you were going to pay cash for the home, and now you only have to put down 50%. Well, that other 50% could be used to buy a long-term care insurance policy. It could be used for investment purposes to extend the longevity of your retirement nest egg. But look at your options.
Yes,
Michael, the reason that people with money tend to keep their money and folks that don't necessarily have a lot of means tend to not necessarily have a lot of means, I think it has a lot to do with just the seeking of knowledge and the seeking of information.
Absolutely.
And being willing to become educated and become empowered and allow your thought process to evolve and change. If you're somebody that says that here's the word reverse mortgage and automatically says, no, that's not for me, right? And you don't realize how these products have evolved and changed and how the whole dynamic, the reverse purchase product has only been around since 2009.
Right.
Reverse mortgages have been around since the early 80s. So these are, in some cases, brand new mortgage products, but they could be life changers. You just have to be able to empower yourself. And then once you have the knowledge and information at your disposal, make a strategic decision, not a decision that's made with emotion, but decision that's
right.
A decision that's made from fact-based fact finding and just getting the information that you need and being able to actually make it a well-informed decision.
Just to get onto something emotional just for a minute, I remember one of the first purchase reverse mortgages I ever did, and we're going back probably 12 years, to 2009, because I started, talking to real estate agents about it as soon as it came out. And I was so looking forward, even 12 years ago, to doing $300,000 mortgages and $200,000 mortgages. And lo and behold, my first purchase reverse mortgage was a $90,000 home, which you got to remember 11 years ago was not today. That $90,000 home was a quite cute 3-bedroom, 2-bath home in Pasco County here, in a very little nice town called Holiday. It's close to the water, not very close, but I mean, nothing to be ashamed of. And I'm thinking to myself, wow, $90,000. Now, they were thinking of doing cash, but they read something in a newspaper about doing a reverse mortgage. And the real estate agent called me in, not a financial planner. Why? Because most people that are buying $90,000 houses don't have financial planners. And I went in and we talked about it. And I probably stuttered and stammered a little. It was my first purchase reverse mortgage. And I'm sure you remember those first few months, November 2008, December 2008, then like January, February, March 2009. They must have made 50 changes to the program. So I stuttered and stammered a little through the first one. But I, being younger then, went to my closings and brought a gift. It was so good to do that. I still try and do that in today's COVID-19 world, but it's very difficult. And I remember this couple looking at me that was not much older than me. I was in my late 40s, early 50s. They were in their mid 60s. Quite frankly, living off 2 nice Social Security checks. They both worked nice jobs and did their contributions to Social Security. They were not poor people. One of them had a small pension. They certainly weren't upper middle class. They probably weren't middle class income. They were probably lower middle income people. And they were going to have a nice life. And of course, we had to verify the assets in the bank. And they had a couple of $100,000 in the bank. These are hardworking, great American people. It's the American success story, moving to Florida. And when they looked at me at that closing and said, we planned on writing a check, for $90,000, because that's what we sold our other house for, coming to closing, and if you remember 11 years ago, it was like 65% we were lending. Yeah. We got ourselves in trouble with that. So they said, you don't understand. We have an extra $55,000. I mean, they just looked at me and went, do you know what that does for us? We were thinking of maybe both having to work. I'm not sure we have to, or at least both of us don't have to, and certainly not full time now that we have an extra $55,000. And I tell you, I remember those people. I could tell you their names, but I don't want to embarrass them because I know they're still around. That was a life changer for me. So it's always fun to talk about that extra $200,000-$300,000. But boy, the people buying $150,000 to $250,000 houses in this country, which in today's world, as staggering as it is, that's not an expensive home in most areas. That extra money that they can have, I mean, I don't want to keep saying a life changer. It's a life-changing event. I don't know what other words to use. And I also, once I get your comments on this, I'm going to turn back to realtors just for a second after you speak. If you have anything to say.
Yeah.
There was a little camera lag there.
I thought you had something to say first, and then we were going to turn back to realtors. No, I think, look, for most homeowners that are 60 plus, they've probably been in their home for, I don't know, a decade, 2 decades, maybe even 3 decades, right? We're talking to a lot of people today that have been in their home for 30, 40 years. These homes are free and clear or close to it. When they bought the house, they would never have imagined that the home value would be what it is today.
Yep.
But these aren't folks in a lot of cases that would qualify for a $300,000 house, or even, like you said, just a $250,000 house. That's a lot of house for them. Maybe they bought their home for $80,000, 30 years ago, and maybe it's worth $300,000 right now. But they would have trouble qualifying, particularly on a fixed income if they're just drawing a Social Security income. Your income diminishes when you retire. Yeah. Your bills go up, and that's another misconception is that's that right. When I retire, my bills are gonna go down. Your bills actually go up in retirement in most cases. Mm-hmm. Remember healthcare costs. Remember extended care, just maintenance on the home and that sort of thing. Typically, you're going to find your expenses go up in retirement, not the opposite. So how are they going to if they know that the home that they're in isn't a home that they can safely and comfortably age in place in? What are their options? And it's either cash or taking out a mortgage. If they're going to go the mortgage route, they got to finance it, and then they got to be aware that they're going to have a monthly payment. And if you're somebody that hasn't had a monthly payment or hasn't had a large monthly payment, now to have a payment for the next 15, 20, or 30 years, it could be a wrecking ball on your overall retirement nest egg. A reverse for purchase, it may not be the solution for you, but it sure should be a part of the conversation. And you should really become empowered and understand how these products work. Right. They are game changers. And I don't just think that it's because we're in the reverse mortgage business.
That's right. So hot, yeah.
If we were outside of this business looking in, I like to think that we're two smart guys and we would say, how are more people not doing this?
No, without a doubt. And one of the reasons, besides you being, great at what you do and being a very eloquent speaker, one of the reasons why I love having you on is I found when I tried to start the show and I try to make it as successful as I can, it would be too self-serving. I mean, I'm in the reverse mortgage business. So, of course, he wants us to do that, which is why I look to a third party. I've said this to you before. I just love your messages, your videos. It's just a little too self-serving, for the milkman to go, you want another gallon? And I don't want us to appear that way. And I know we don't, but especially you don't. But I'm gonna circle back to realtors for a second, because the last time I checked, and it's been a couple of years, so this number may not be correct. I think there's somewhere around 25, you may know this number, 25 or 27,000 certified financial planners out there. I don't know. I could be low because it's as much as I do with the FBA. I haven't asked them that number in a while. But there is 1.6 million real estate agents. And I agree with you that most of them, if not 99% of them, and this is no disrespect to my realtor friends, are not going to take a $300,000 cash sale or a $400,000 cash sale or a $200,000 and go, no, I don't want to close in 10 days with a cash sale. I'm going to turn this into an FHA reverse mortgage. We're going to get an inspector out there. We're going to find out there's something wrong with the doorknobs and that the water heater isn't perfect and that the banister on the railing on the steps is loose and the septic tank is not 100 feet away from the house like it's supposed to be. It's 93 and we're going to have to dig that. I don't blame realtors.
Or the appraisal comes in $2,000 low. I mean, who knows? Yeah.
Or 27,000 low. So I have no disrespect for realtors looking at us a little cockeyed when we go, why aren't you doing this for everyone? And I've watched a lot of people do classes. And I love realtors. Most reverse mortgage people don't. But my living, my lifestyle, my children's and grandchildren's lifestyle for the last 39 years has mostly come from real estate agents. And I love them. I hear, especially in the reverse mortgage world, there's no loyalty from them. One of the favorite cliches, and he's going to know who he is because he's one of my favorite people, goes, oh my God, getting realtors to get you business is like, give you business is like herding cats. He's been saying that for 10 years. And I go, stop saying that because they're great people. They're us. They're out there trying to help and they don't make a living. They're not on a salary. They don't make a living unless there's a closing. And this is, again, where I think the industry has failed. Instead of saying to these real estate agents, oh my, why don't you look at every one of these like their mother and father, like your own mother and father? Wouldn't you do this? They're not going to do that, and they're not supposed to do that. Maybe in a perfect world, but not in our world. But how about looking at the purchase reverse mortgage as the only ethical and moral upsell that these industries have ever seen? How about that person that comes in with $300,000 cash and you take them to several $300,000 homes? And I'll use Florida as an example because we're 80 degrees and sunny, and Baltimore is 22 degrees with freezing rain. I don't know if it is today.
Not today.
Not today.
It's late March. We're 50s.
Oh, swimming weather for you guys. And by the way, that beard can be used as a flotation device. So can you imagine, though? And I see this for 39 years. You take your clients, my realtors take their clients, they look at the first $300,000 house because that's what they have. Their financial planner, or if they don't have a financial planner, their son, their daughter, their somebody in their sphere of influence said, only spend what you made on the previous house. Don't touch your portfolio. If you have a portfolio, don't touch your savings account. But they look at all these $300,000 houses. Yeah, I guess I thought retirement was going to be different.
Yeah.
But what do? They settle and they buy. Mr. and Mrs. Realtor and all the consumers that are listening, tell your realtors about this when you're looking for a house. What if you take that $300,000 budget of yours and move it to $400,000? And you're in your 60s, so you're only going to put up $200,000. You now have the house of your dreams. You didn't spend $300,000. You invested $200,000. We've made your goal of no payments, no mortgage payments for the rest of your life, principal and interest. You're going back and putting another $100,000 that you didn't spend in your savings account or portfolio or back to your financial planner. But now all the real estate agents that are listening, and we're going to cut this part out. We're going to send it out on LinkedIn to every real estate agent that can log into LinkedIn. Listen, is your commission based on a $300,000 house, like is what they were going to spend when they first came to you, or a $400,000 house? Did your commission just go up 33%? Because you listen to Steven Sless or Mike Banner or other professionals like us? 33%? And did you hurt these people? Did you raise their payment 33%? No. There are no payments on a purchase reverse mortgage. The only ethical and moral upsell in this country to put people in their dream retirement home and still give them back money? Again, I don't get 1.6 million realtors. Well, true, only 12 of them actually sell houses. But 1.6 million realtors going, what? What did he just say? And I think I blame the industry for that too. That's the way to sell it. And I think the industry has been afraid of the word upsell. But if it's moral and it's ethical, don't be afraid of it. Your thoughts?
And let's make a couple things crystal clear. The homeowner still owns the home. Yeah. This is just a mortgage loan. There's a lien, no different than a traditional mortgage. The difference is the client, the buyer, they can choose whether they make a monthly mortgage payment or whether they defer payback until they leave the home. They go for the ride as the equity of the home goes up as well, or as the value of the home goes up as well. So if the home value goes up hundreds of thousands of dollars during the time that they're in the home, that's their money. What we're saying is that you can put down roughly 50% and finance the other 50% with flexible repayment options. It does not change that you still own the home. Mm-hmm. And I think that's a misconception as well. Right. And then, a realtor, oftentimes the feedback that a realtor provides to me is, well, there's got to be a catch. What's the catch? It's too good to be true. That can't be. Sure it can. This is a loan that is specifically and designed for homeowners, or home buyers, I should say, 60 plus. And it's designed because there was a need identified in the marketplace. Seniors were having a really tough time transitioning from their home that they raised their family in and have been in for 20, 30, 40 years to the home that's going to be conducive for their lifestyle as they attempt to age in a safe place. These loans were carefully thought out, and they are, and they remain today the most well thought out mortgage products on the market today.
Ever.
Some of the safest mortgage products on the market today. There's more regulation on a reverse mortgage than any other mortgage product on the market. These are safe loans that home buyers can take advantage of to be able to age in a comfortable place. And the alternative, Michael, may be, maybe they can't finance a home and make payments later on in life, and maybe they're going to go into a long-term care facility. But I come back to the clients that I was explaining in the beginning of the show, clients that are realizing that they don't have to settle. And I love that you made that point. Live retirement on your terms. Right. Enjoy retirement. If you want a customized bathroom or a marble, floor to ceiling or ceiling to floor, beautiful custom designed shower, get it. Yeah. My buyers right now, they're getting all the amenities that they've ever wanted that they didn't have in their former home. Now they're going to have them, and they're not going to be required to make a monthly payment unless they choose to. There is no other decision for them.
That's right.
But more people need to understand that these options are out there.
Yeah, and I don't even know your clients, and I can tell you they deserve it. If you're going towards the retirement portion of your life, have what you want. I've had some people say to me, Michael, you're, after a class of mine or a webinar, your spiel is very emotional, and we could take that extra couple of $100,000 and invest it wisely, put it into a long-term annuity, but we're pretty well set. So let me tell you what we're going to do with it. Why? I had one of my favorite things ever, and happens to be my fantasy vacation. This set of parents took their 4 children, who were all married, and grandchildren. It ended up being about 14 of them. They took them on a 2-week cruise to Alaska. I've always wanted to take my whole family, children and grandchildren, that we just haven't done it. But 14 of them. And this was recently. I shouldn't say recently, it was in the last 5 years. And it was a good 40 grand. When they got all done, they sent me pictures, and they went, we're not poor, we're certainly not rich. But if we didn't do the purchase reverse mortgage, we never could have done that. And that feels good. I have had people say to me, Michael, we're going to do this. We sure as hell don't need to do it. But I have 4 grandchildren that are strangling on their student loans right now. And yes, I am going to leave those grandchildren 50 grand each when I die. But I don't really want to die for another 25 or 30 years, and they need it now. And I don't really need a reverse mortgage. I could pay cash, but I don't want to take a couple of $100,000 out of my savings. Mom and I want to live to be 90, but we're going to do the purchase reverse. We'll have an extra $200,000, and we'll gift that $50,000 to our grandchildren now and enjoy it and watch the smiles on their faces. There's just so many uses. And sure, it's fun to talk about the serious long-term care and life insurance, but how about just life? How many children are in trouble right now because of COVID-19? How many grandchildren are really strangling on their student loans? I can't tell you how many people a month I reject in my mortgage company, not for reverse mortgages, but for regular mortgages, because the payment on their student loans is bringing their debt ratio over the maximum limit, and they can't buy a home. 800 credit score, nice down payment, husband and wife in their 20s, and their combined student loans won't let them qualify for a mortgage.
Michael, we're seeing prospective reverse mortgage clients that are in their late 60s with student loan debt.
Oh, yeah.
I mean, and that they've been trying to pay off for 30 years. Student loan debt is a huge issue, not just with the younger generations, but seniors are still dealing with the burden of student loan debt today. And we're having to turn people down as well because of student loan debt.
Well, I'm 62 and I have a huge student loan debt for one of my children.
Yeah.
And I'm glad I did it. I'll never regret it. But I've been deferring the hell out of that for a long time. There's just, when the concept for the show first started, it actually was 2008, 2009. And it usually doesn't take me 10 years to do something. But then, of course, the Great Recession happened and, things weren't great for anybody in the mortgage business. So 62 Who Knew got delayed. But in the very, very beginning, this was supposed to be a show only about reverse mortgages. Okay? And I think I might have sent you some of the cheesy videos from 10 years ago. You would laugh at them if I didn't. I actually came up with 62 reasons why you should have a reverse mortgage. And granted, the last 5 or 10, I was grasping a little. Okay? But the first 50, they were easy to come up with. And then 10 years went by and life got good. And, we went and we started the show and we decided it should be about all assets of making it to 90. So obviously we bring up reverse mortgages on a fairly consistent basis as a financing platform to help people get what they want to get. But I really did come up with like 50 great reasons that you could do this, from helping your children to helping your grandchildren to having your dream home to having that huge pool, the outdoor kitchen. I don't know if you've ever experienced this. I've done many reverse mortgages where the first thing the people do after getting the funds from their reverse mortgage is $20,000 to $25,000 in dental work. I don't know if you've ever experienced that. People deserve this. And, I'm glad we didn't do this show only on reverse mortgages because there's just a plethora of things to talk about. But, yeah, I bet you could, if I asked you to write a list of what you could do with a reverse mortgage, I bet you could, of our 50 things, I bet you the first 10 or 20 might be the same, but then you'd come up with 20 or 30 different ones that I never thought of.
Oh, yeah. And it's interesting you bring up the dental. We've seen that a lot with our senior clients. We've seen not just dental, but hair restoration, body transformations. I mean, look, you only live once, right?
Yeah.
Be happy with your life. And if you all of a sudden have the means to be more comfortable, so be it. But I think we got to document those. We either need to write a book about that or create another video series about all the uses of reverse mortgage, because it goes far beyond what we always talk about every Monday at 5 o'clock here, long-term care and Social Security and Medicare and Medicaid. Retirement's about enjoying life.
That's right.
Whatever that means to you. And if it's going on an Alaskan cruise, so be it. We're not encouraging irresponsible spending. What we're saying is use your assets to the best way that you can in retirement and do the things that are important to you.
Yeah.
Aging in place today, especially today, this year, more so than any year in the past,
God, yes.
Aging comfortably in place is critically important to every client that we're talking to each and every day. They don't want to go into a long-term care facility. They want to know, yes, maybe they're going to go on that Alaskan cruise. Maybe they're going to pay off the student loan debt for their children or their grandchildren. But their dream, beyond all that, is to age comfortably in place in a home that they can enjoy life in without being a burden on their loved ones, without care being a burden on their loved ones. They just want to be comfortable. And oftentimes, being comfortable means making a move later in life. And that is far more difficult in your 60s or 70s or 80s or particularly your 90s and above. And we've done purchase loans for folks that are in their late 90s.
Oh, yeah.
It's a lot more difficult. The move is a lot more difficult. The stress is a lot more difficult. But these are viable options to ensure that you're going to be able to live the lifestyle that you want to live. And again, it's about so much more than just the economics. The economics are just one small piece.
Yeah.
This is about enjoying life.
It's about emotion. It's about everything. It's about, I got to tell you, your loved ones. It was on one of our calls with a few of our peers, and I don't remember who said it, because the term age in place, my God, every insurance agent, and I don't mean that in a bad way, every financial planner, every mortgage, we all use it. If you Google it, I don't know how many millions of options you'll have. And I don't remember who it was. I think it was either Bill Comfort, it might have been Joe DeMarchi of Reverse Mortgage Funding, or Bill Comfort of Comfort Insurance. Somebody said, or it might have been you, it wasn't me. Everybody's so used to saying age in place. It should be age in place and age with quality, not and age in a safe place with quality. We have a habit of shortening these things, age in place. Well, the homeless guy is aging in place. It happens to be, a refrigerator box. Age in a safe place with quality. We're doing it with only a minute left. We're not doing a purchase for her, but we're doing a regular reverse mortgage right now for a 102-year-old woman who actually did the counseling on her own. You should, a little hard of hearing, sharp as a tack. I said, can you do the counseling? Would you like your financial planner to be with you? Because that's who, why would I need him, Michael? So, but this is for $5,000 to $7,000 a month in-home care, because she doesn't want to go in the home. Oh my God, 102 years old, 24 seconds left. Always such a pleasure to have you. Thank you for doing this. Again, our thoughts and prayers to our guests. We hope everything is okay. To our audience, hope you like this show, because Stephen and I are going to cut it up in 20 pieces and just send it everywhere we can possibly send it. Thank you all. Stay safe. Let's do something very nice this week for somebody that deserves it. Take care now.